So how you doing? Where you from, Paul?
I'm originally half Irish. I was born in Ireland originally.
Mm-hmm.
Also half Polish, as you can see from my surname.
Yeah, it's
and
cool.
I'm currently in Warsaw area. My family house right here, and spent a lot of time in UK. That's where I studied. That's where I lived in Southampton, and I probably might be back here in London area. So I have most of my friends or whatever.
So you live in the UK or in Poland?
I
mostly?
used to currently temporarily I'm in Poland because for personal circumstances, but I lived in UK for a couple of years before coming here. I moved around Europe quite a bit, so I spent quite a lot of time in Belgium as well, in Antwerp. So Dutch, I can survive with some minimal Dutch. Maybe not, maybe a bit different accent, the Flemish. It's a bit different, but yeah. So I moved around. I was born in Ireland. I grew up there. Then I went to international school in Poland. Went back to Ireland for COVID. Then I went to uni in UK, and my partner used to be Flemish, so I used to basically commute between Belgium and UK quite a bit for a couple of years,
I see.
using Eurostar and all that. So yeah, that's my background. Very convoluted.
You've been around. You've seen lots of
Europe,
places.
yeah. I mean, yeah, for better or worse, I guess.
Yeah.
For sure.
All right. Well, it's great to have you here, man. I've been looking into Cakebox. I've heard the name a couple times before, and I found it pretty fascinating because it's so quite simple. It's a micro cap, but when you look at like the returns on capital and some of the numbers, it's pretty ridiculous for such a niche product. So how about we get into the company? You told me you are currently in Poland. You lived in the UK. So for listeners who've never walked into a Cakebox store, perhaps just briefly, what is Cakebox and what makes it like different from the average bakery or a cake chain or whatever?
Yeah, so Cakebox is a franchised egg-free celebration cake chain. So it's fully franchised. Every single store is there's no corporate stores like a Domino's or something like that. And what really differentiates them, I think, is that they sell egg-free cakes specifically. And everything there is egg-free, everything there is halal, everything there is, vegetarian, whatever. So, and the origin of the business is very Asian. And, in UK, it might confuse some American, whatever, listeners. But in UK, when we say Asian, we mean South Asian, quite typically. So, Indian, Bangladeshi, Pakistani, Sri Lanka, whatever, right? So it's very culturally, the founder is from this culture, most of the franchisees are, lots of customers are, and those are the people who eat egg-free cakes for religious or cultural reasons, and they will not consider anything else. You can compare it to a kosher store or a halal butcher, for like Islam or Judaism, I suppose. So that's how it's different. Like it's culturally and religiously connected to this group of people as well.
And is that the main customer they're focusing on, or are like the people from the UK also interested in the store and the products?
So the way you can look at the customers is I call them core, like all the Indians, South Asians, whatever, refer to core, and non-core is and like indigenous, white Brits, black Brits, what have you, right? And the core serves as a very good starting base, and it's much stickier than, because of course they shop there for religious reasons. I mean, there's nothing more sticky than that. But that would not be enough for this business to operate, because Asians are like maybe 10, 11% of population, 9, 10 of UK. That'll be too niche, way too niche. And we actually did what my previous job that I did, like, the American hedge fund, the investment fund. We did a very long and structured scattershot research when we visited dozens of stores, up to hundreds of customers. And most of them are actually non-Indian and are like white, black, what have you, from all sorts of backgrounds. And some of the best performing stores are in very non-Indian areas. So like you have a store in Wrexham in Wales where there's like 3,000 people and most of them are like very Welsh, So I think it has appeal to everyone. It's just that South Asians will be buying it much more, and they're just much kind of a sure like core customer group. But the current focus of the company is to expand more to the indigenous population and the sort of like the egg eating population, let's say. So of course, if you don't eat eggs and this is your only scaled, egg-free cake alternative, whether it's religious, dietary, whatever, then you're the core customer, right? But if you just want a good cake and you don't care about eggs or not, then I consider you non-core. And from the people we talked to, I think around 60 something % of them didn't care about eggs and were of non-Asian background. So actually most customers are not core. And a lot of them have shopped at Cakebox for many years because I think just the business itself has very good economics. And so you could see there's this core group, very good, very sticky. It's kind of a base, right? And then there's this indigenous population that just like the taste. And I think there's a lot of, I wrote it in my Substack as well, but I think there's a lot of kind of economic effects that play out, and specifically egg-free cake chain, but we can dive into that later as well.
Is there a comparison you can make to Cakebox, or is it like too different?
A good thing about Cakebox is, which is interesting, is that it has no like-for-like competition in UK or anywhere in Europe or in North America as well. The only scaled like-for-like competitors are in India and in South Asia, of course, right? And but there's a lot of Indians and South Asians in Europe and Canada and New York, right? Jackson Heights, which is the part of New York, they had last election, you could cast ballots in Bengali, in Bangla, in one of the Indian languages, because there's just so many Bengali people there of Bengali origin. What was your question? Sorry, yeah, I tend to drift off.
If there is like a comparison you could make to Cakebox.
There's no comparison really. I mean, there is. It's interesting because it's a business selling for a PE of 16 with no like-for-like competition whatsoever, which is quite good, I think, as well. And the only alternatives to Cakebox are supermarkets, mom and pop, and there's 2 copycats, which used to be franchisees of Cakebox that left and started their own chains. But those guys have 15, 20 stores each, and they add 1 store a year, while Cakebox adds 25 a year. So I think the scale is massive there. And but I never have any comp for Cakebox because it's hard. I don't know, if you find me maybe, even if it's not egg-free chain of cakes or sweets, the closest thing would be Ambala, I guess, but Ambala just got acquired. Unless you find some sort of a publicly listed kosher store chain or like African American barber, maybe those have similar kind of a cultural economics to Cakebox, but I don't know of any.
Have you ever been to like a Cakebox or an Ambala store?
Shopped there for years, yeah. And we did the Scalbot. So we visited like 50, 60 stores within a span of a few months last year. And we did a lot of structured interviews with customers, franchisees, management, whatever. And I think I've been to, by now, probably 60, 70 stores of Cakebox out of 260. So yeah, I've seen quite a few.
What is it like? What are the cakes like? Have you tried some?
Yeah, before even doing the Scalbot project at my previous job, I would shop at my local Cakebox in Southampton for like 2 years. So I'd known that from a purely customer perspective. The cakes are much lighter, if that's something you're interested in, the taste. I know if you've ever had an egg-free cake, I think no. They are much lighter. They're much more spongy because if you remove the eggs, they become just very light and spongy. And that's one of the cool economic effects here, because for like non-core, non-egg-free people, if you don't like the taste, and it's fair, there's bound to be people like that, you will not shop there again. That's okay. But if you like the taste and you get used to it, there'll be no other place to find something like that. Because Cakebox is unique in that sense. And I guess that really plays in well with Michael Porter and the whole concept of mode being something very unique and very different, and being able to define who are your like anti-customers, who are your people who you don't want to have. Yeah. So the taste is very different, much lighter. The stores are very small. They're not designed to dine in there. You just collect and go, It's like Subway with cakes, but they're all fresh. All of them are fresh, made during like less fresh cream, fresh fruits, whatever. And with a lot of competitors, historically, if you want a cake, you would have to wait a day at least, maybe 2, 3, especially if you want to have a text, picture on top of it for your birthday or something. With Cakebox, you get it instantly or even within an hour. And a lot of people we met and we interviewed, they would just go there. They were on the way to the party and they would just buy it on the way and just go straight there. And it's fresh. They get the name, the text, the customization option on it, which is something that most others just don't do. Nothing.
How do they manage that?
The thing about cakes is that Cakebox produces the sponge and there's no royalty in the system. Almost all the revenue is the supply chain revenue in this case. And all the franchisees are expected and they all buy all of their supplies other than the fresh fruit. Everything else is bought from Cakebox. And Cakebox bakes it. So as a franchisee, as a store, you don't have to do anything. Like the Cakebox makes the sponge, cooks everything, gets the fresh cream, gets all the ingredients, and sends it to your doorstep. That's why people who work at Cakebox, they're not bakers or anything like that. They're technically referred to as cake decorators. That's the official title. Because it's like a Lego set with manual. What you just get a sponge, you put the cream, you have the special laser sort of instrument that I have in the back that helps them write the names and whatever on top of it. And it's ready, and sponge it's good because you don't need to bake. It's not groceries like with delivery, like a Dino or something, right? There'll be more you need to send every day because the food goes bad. You want to have fresh food. With cakes and with sponge, really, the cakes last like 2-3 days. You want to sell them on the same day, but a sponge they send typically is like up to 2 weeks. So it's good with delivering for long distance. You need to kind of keep it up to 2 weeks before you actually sell it. So I think this is good for a longer distance expansion as well, logistics, whatever.
That is so different than what I would have thought how Cakebox would operate. Cakebox makes no money from royalties, you said?
No.
Does this mean that excessive profits go to the franchisee?
The way it works is that franchisees just the cogs, right? So the supplies they buy are from Cakebox. And yeah, if they make better margin, it just goes to franchisees. They do have now the National Advertising Fund, which is what Mike, who came in from Domino's UK, was a CFO there and I think Chief Marketing Officer there for many years. He kind of implemented this Domino's model of a National Advertising Fund, which is great because it builds every franchisee chips in like a few percent to the marketing and Cakebox does the marketing. And, like Bruce Greenwald, the professor from Columbia, he would always say that the scale advantage is relative to your competitors. So you have those Cake In or Cakes and Bakes, which are those 2 small copycats with 15, 20 stores. They can't do that. They can't do national scale national kind of marketing like Cakebox can using this. So this is great. But there's no royalties, no. And the reason is because Suk, the founder, he realized at the beginning, which, you can look at the disputes and problems that Domino's had and the fights with the franchisees in UK, which probably might have heard about, is that if you have royalties, he realized that some franchisees would suppress the revenues on purpose. So to pay less in royalties. And there's ways of doing it. And then as the management of the company, you just have to go there and you have to police them about royalties. And this doesn't build really an atmosphere of trust as well. So not only there's this tangible thing of them suppressing the revenue to pay less in royalties, and then the whole policy royalties thing is weird for the culture. So Suk realized he could just price in the royalties in the supply chain revenue. So the effect is the same, but I think the structure is better.
Yeah, it seems like the incentives are more aligned this way. Interesting. Yeah. You said you visited around 60 stores or so, perhaps
56, 60, I think it's in the range, yeah.
Can you tell us, I don't go to the UK every year, so perhaps can you tell us a bit about the experience with ordering these cakes? How was the service? Perhaps give us some insights for those that can't visit the stores or try the products.
So what was interesting is that we looked at many things when we visited the stores. We looked at, as you said, the quality of service. We looked at the how clean it was. We looked at the speed of the service, the vibe of the employee. We looked at the location, what other stores were around. the quality of cakes, like were they cracking, were they not cracking. Actually, we talked to one of the managers before going there, and we asked him, one of the questions we asked him was, what sort of things you look at when you do the kind of inspections of Cakebox. So we kind of did some things he does as well. And I have actual stats, I have actual data, and most of the stores, like, there's always a bad apple. Like you can't avoid, especially if you have a franchise, right? And you outsource the management to like 90 plus franchisees, which is the current number. There's bound to be bad apples there. Most of the stores are, I would say, very clean and they're well managed. There are some stores where we waited quite long for the person to come out. Some people were rude, but like 80-90% on average in all of those categories were very good. There's no bad smell. You enter, it's a small store, right? You just come in and you say, there's typically a bell when you enter, so they come from the back or the front. Then what we did, we were actually measuring the average time of service, them coming, and then we had averages for every time, which was also fun to do. But no, the service was good all in all. There were some issues that we spotted as well, and we talked to the management about this as well. But one of the issues was that they have the loyalty program. It's a detail. It's probably not important for like a general podcast about the business, but the staff can be passive sometimes. Do you know what I mean? And they don't really promote the product. They just stand there and they're like, "Oh, hi, what do you want?" They're like, "We're looking for something," but they're not really going out of their way to sell it, or I guess they don't really have strong incentives to do it as well. But for example, there was a loyalty program where you collect points and you get free stuff later. At Cakebox was rolled out quite recently, and they weren't really educated regarding that loyalty program. They wouldn't really would point it out. Oh, what's this? They're like, "Oh, yeah, how does it work?" So I have the app, and some of them didn't know how it worked, whatever. So I guess that was pretty funny. But overall, I think the stuff is good. A lot of them are from the Asian background as well, like majority. There's some where it's like black, white, whatever people there, but very often, yeah. Makes sense. Very often it's franchisees who are Asian as well, and of course they have big families quite often, and they would hire their friends, family, whatever, etc. And this is kind of how the business has grown without any advertising and with a big backlog of franchisees, because it's word of mouth. There's it's community. It spreads through the community. At least originally it has done that. So yeah. Sorry for ranting. Yeah, you can.
No, absolutely. This is perfect. We don't get these insights daily since we can't visit the stores. We can, but we'll have to fly over there.
It costs money as well, buying a cake at every store.
So I might just not be understanding you right. The cakes are made centrally, so every single franchisee store gets the same quality cake, right?
Yeah, sponge. Yeah, like the base, thing, basically, and they just decorate it with.
So let's say it's my birthday and I want to make like a customizable cake. I can either go to the store or online, correct?
Yeah, you can click and collect, so you can order it and then you can pick it up from your nearest store when it's ready.
But so let's say I want like a different color, a different taste. I want my name, my age. How does the store manage to customize it, since they just decorate it? That's it?
Yeah, they decorate. As in, like, there is specific types of cakes. There's different products, like at any store and business, and you can pick this sort of a cake, and then this can have special, picture, text, extra things. You cannot make your own cake. It's not like you cannot customize it fully, but you can put the name, and you can pick one of the types of cakes, and then you can have a name. And
I see. That's okay. So how much growth do you think is left for a company like Cakebox? Well, internationally, it seems like they have many more places to go.
For sure.
But do you think this is like a concept that would scale well internationally as well? What are your thoughts on that?
Yeah, the thing is, it could, but even in UK, there's just so much room to grow. Like, they're only present in big cities like London, Birmingham, maybe, right? They only started expanding in Scotland and then north of England and Midlands, and then Northern Ireland as well. And there's the first store in Paris now, which is very successful. The thing is that some of the franchisees we talked to, two of them were very interesting because basically the one of the people I talked to, his brother-in-law is responsible for the Paris expansion in France because they're French Indians. They first moved to France and then some of them moved to London. So this guy who's a franchisee from East London and has like 5-6 stores, I had a long chat with him, and his brother-in-law is the Indian guy in France, and he's doing that in North Paris, which is very Asian. I met another franchisee, and she said that whenever Suk will want to expand to Germany, to Cologne or something, she has family there, and they will be happy and first in line to run cakebox stores. Because running cakebox stores is very easy. You don't need to bake. The margin of error is tiny. You're just decorating ready-made cakes. You have this religious base customer group, so you're guaranteed to stay afloat. If you build in a good area, of course. And but even that, there's so much growth, room to grow in UK as well, I think. Because one of our key elements of the thesis I wanted to check was that whether Cakebox has appeal with non-Indians. That was the core thing. Went to see it. We spent months. That's why we went specifically later towards the project to go to the non-Indian areas in UK. And those were just as busy as the other ones. And we singled out, there's this database where you can see the ethnic demographic breakdown of every single ward or district in UK. There's hundreds of them. And we learned from the CFO that typical cakebox store covers 80,000 people, right, in the area. That's their radius, sort of. So I went to every single store and I checked this 80,000 people for this store, what's the ethnic breakdown. So we have database of exactly every single store, and it's 60% white, 15% Indian, 10% black, whatever. And we have data like that for every single store in UK. And out of these, we took the ones that we kind of refer to as non-Indian, non-Asian, which are the ones with 10% or less in the 80,000 sort of vicinity. And out of these, we looked at the stores that were open for at least 3 years, right? And this narrowed it down a bit more. We knew that the management has a naughty list, sort of the 20 worst performing stores, and there seemed to be no correlation at all, whether that's Indian or non-Indian, whether they perform bad. Some of the stores we went to that had the most customers and were best performing as well, they seemed very busy and whatever, were also in very non-Indian areas. There's less than 10% Indians there. So it seems to be the case. And a lot of people just, really like the cakes. And cakes have great economics that I can go into, but that's a separate topic here for this as well.
Well, I think that's a great little bridge to talk about the unit economics, because
do you mean for the franchisee or?
Yeah, I'm just interested to hear a little bit about how you think about the numbers, the unit economics for Cakebox, especially considering perhaps the cakes, the franchisees. What can you tell us about it?
Yeah, so the typical Cakebox store makes around £360,000 a year in revenue. The EBIT margins are around mid-teens. They should be around 15. Now they're more 11 maybe, because the cost of living crisis, at least they were last year for the franchisees. So you're looking at anything between 10 and 20%, depending on the economic sort of condition as well. And that's the EBIT. That's the EBITDA. Sorry, that's not EBIT. That's EBITDA margin. I'm looking for. Sorry, I'm not that well prepared, I guess, but I have a separate here. So a typical food cost for the franchisees is around 40% of the revenue, and the typical revenue is 350, 360k, right? Average for a typical store. And then labor is around 20% of this. And there's no royalty. There's 1.5% national advertising fund, and then the rent ranges from £8,000 to £25,000 per month. Utilities are 800 to 1,000, and then you get an EBITDA margin between 10 and 20%. So around 40k EBITDA. So the business you get is 350,000 in sales and around 40,000 pounds in EBITDA per year. This is the unit economics, which are okay. I think they're quite good for the size.
Interesting. Well, I mean, when we look at like the last 9 to 10 years, revenue has grown pretty meaningful. I think around 20% last time I checked.
Mm-hmm.
Earnings per share about 13.5%. I mean, it makes you wonder if it's such a simple model, such a simple idea, why is no one else trying to do what they're doing? What makes them different from, like, I mean, you said there is no one like them, but what makes other people, if the economics are quite interesting, and if you look at like these financials, what is like the barrier that stops other people from trying?
The barrier is customers, because you can't, it's not a commodity business where you have the lowest price and, we can have lower price, and it's not a rational decision for the customers. So, when you get people who, I think typically for most people, I don't know about you personally, but for most people, I think you don't get up every year regarding the birthday or some party and you think, oh, which of these 4 or 5 cake chains I should go to? Most people have their kind of trusted go-to thing that their children liked, everyone was happy with them. There was no food poisoning or something. And so most people tend to stick to their kind of sweets cake store that they go to for years, right? It's not something you decide every month, every year and consider 20 options rationally. So that's one thing. And the thing is, it's the customers, really. I mean, for Cakebox, it's the same thing you'd ask, like, I don't know, why, if there's like a guy who owns all the kosher stores in a Jewish neighborhood somewhere, why does no one replicate it? I mean, all the customers know it. They've been going there for many years. They go shop there for religious reasons, for cultural reasons. They trust it, right? It's a very intangible mod. I don't think you can just copy it and enter. It's a share of mind, like with Coca-Cola or something. I mean, it also shows that, Cake In and Cakes and Bakes, which are just 2 copycats, they've struggled. They've never really grown seriously. And what they did is basically to Cakebox, change the color, change the name, and did the same thing. Some of them, I think, literally rebranded their own Cakebox stores to the new thing.
So why did they fail? What did they do wrong?
People want to buy Cakebox. They want to buy Cakebox cakes. They're used to it. They trust it. I don't know, their aunt shops there. Their brother-in-law runs it. It's, it's just, it's
creatures of habit in the end, right?
We're creatures of habit, and I think trust plays a big part in it.
Okay.
So it's a niche business. When you think about all sorts of niche businesses, why are they not copied and replicated?
Yeah, the niche is so
why
small.
Doesn't Jeff Bezos come in? Like, it's too small. It doesn't make, so for big people, like, it doesn't make sense. It's too small to specialize. And what Asda is gonna come in now, and they're like Sainsbury's, and they're gonna take what? Like, have a dedicated team to focus on this. Sook's gonna kill them, because this is the only thing that Sook is doing. They've done this forever. It's economically not plausible for the big guys to compete with them, and for the small guys, like, the scale is growing, and for a lot of mom and pop shops that are thinking of starting their own thing like that, it's probably a much better deal to join Cakebox franchise.
Yeah,
to be honest.
Yeah, being the leader in like a small niche is something that doesn't really have a moat, but it's very hard to come in, or just it doesn't make sense economically, right? So
if you look at Michael Porter and the 3 types of moats, essentially, that he kind of nailed it down to, it was, cost leadership, which is just the price moat. It was sort of like big brand differentiation, which I think is also Cakebox in this case. But the other is niche as well. So niches are just economically not impossible to compete for big guys and for small guys alike. When you focus a lot on something. And I think it's also the brand differentiation. The brand is very good at this point for Cakebox. Yeah. So it's a brand mode.
What makes you say that the brand is strong? Because of what you saw, or
because of what we saw and the people we talked to as well? To give you I have a very cool, here it is. How did we put it together? About the most. Yeah, the brand. It's a brand mode. So out of people we talked to and encountered when we asked them the question, 1/3 of them shops there at least once a month, which is quite frequent for cake, because you can also buy slices of cake there, right?
I
For
see.
£4.
Yeah.
But there's some muffins, there's some adjacent kind of ranges. We were very curious, so we asked the question. One of our structured questions was, if there was a competitor called Bakebox, let's say, that built like in front of this one, and it was like few pounds cheaper, would you check it out, right? And it's very interesting. Half of the people said they wouldn't even go and check it out. They don't care about the price. And most of the 75 or like 80% of people we talked to, they didn't care about the price at all when buying the cake. Why? Because it's a special purchase that you do once a year, twice a year, 3 times a year, typically for special occasion. And it's gift economics of See's candies, right? So when I buy something for someone else, less price sensitive than if I was buying it for myself. So you have this kind of, you have the
pretty interesting if you look at it from a psychological standpoint, right?
Yeah, it's like if you have brand modes, like brand modes are purely psychological. Think about it. Think about Coke, think about whatever, right? So you have gift economics. So people want to pay more for it because it's a gift. And it's not just a gift for someone special. Like with See's candies, I think it's even better than See's candies in this sense, because it's also a special occasion, because it's a birthday. Cakes are very strongly associated with birthday, with Diwali, with Christmas, what have you. And, you don't want to mess it up. When you buy a cake for your kids, for your partner, for your very close friend, for a special occasion, you will not risk it with something that's £5 cheaper or £10 cheaper. And that's what people told us as well. We talked to one dad who was shopping there with kids, and he said, I've been shopping here for like 7-8 years, and kids love it. They have a lot of allergies with eggs, whatever, and we will never ever, go somewhere else. We don't care about the price, because it's for the kids or whatever. And it was interesting because to me, when I was at uni in UK, I was a broke uni student, you could say. To me, Cakebox was on the pricey side of things, because it's like, 30, 40, 50 pounds per cake, which is like what, 60, 70 euros per cake, probably. It seemed expensive to me. But then you talk to all those people there, and 75% of them thought the prices were reasonable, which was quite interesting to us, that most people don't care about the price. They think it's reasonable. And so there's a consumer surplus there for sure.
So how would you rank like the drivers of success for a company like Cakebox? Is it mostly about management execution? Is it about the uniqueness of the niche? Is it the brand strength? What do you think will drive Cakebox success in the long term?
Everything you said and more.
Okay, but if you had to rank them from
rank them. Oh, jeez. Yeah. On the quantitative, tangible side, I would say that with every franchise, if the franchisees are happy, it's a rule of thumb. If the franchisees are happy, the business will prosper, So if you take care of the franchisees, they will take care of the customer for you. So if the LFL is good on the tangible side, if they're adding new stores, there's no store closures, the margins are okay, for the unit economics are okay, like-for-like sales are okay. Those are the tangible things, right, that you would look at. System sales, of course, right? The split of system sales as well. On the more qualitative side, you need to define, every time I look at any company, right, you look at the mold. To me, the task is about thinking from the customer perspective and the value proposition. Because if you have a mold, it's addressed at very certain specific needs of the customers, right? And they, for example, I know you looked at Auto Partner probably, didn't you? Or like Intercars or something.
Yeah, we did.
So there, the mechanics care about speed of delivery, and then selection, the price is least important, right? And if you look at the Cakebox people, customers, you also need to think, what do they want? Why do they shop at Cakebox? Then, because they clearly prefer Cakebox over all the other alternatives. And in this case, the mold is the brand, and the things that drive the brand are the things I just told you, right? People would never consider competitors. They're not price sensitive. There's a consumer surplus. They have shopped there for a long time. There's high frequency of shopping. Another thing is it's all the brand. Do you know how you take care of them? Yeah, I kind of messed up the question. Yeah, you asked like specifically to rank.
No, that's okay. But I think you answered them in a slightly different way. But just to follow up on what you just said, are those the things or the KPIs you track as well, like for like sales or store growth? What do you track personally?
Of course, yeah. I can show you my model later, and we can discuss it if you want for Cakebox. So then,
absolutely, yeah, we'd love to see it.
Probably better.
Okay,
but that basic rule of thumb is, are franchisees happy? So as you asked, the franchisee unit economics, right? How much are they making? What are the margins? Are they happy with the business? Do they see prospects? My favorite part, which is maybe not very easy to track, but is to see when I see a franchisee who's already has the shops, but he's opening more shops. Because it means he or she thinks that the prospects for business are good, right? And this is the best thing. And I've met exactly franchisees like that who just open new stores. And so if the franchisees think the prospects are good, they're probably good, because they're on the ground, they're down there. They see what we don't see. And there's all those things I told you about the strength of the brand, from the consumer, like the actual customer point of view. One thing I'll add here, you can edit it in or out, however you please, but we also asked them, one of the questions we asked them was about the supermarkets, right? Because Asda, Sainsbury's, Tesco's, they'll typically have kind of free from section where they sell like gluten-free, sometimes egg-free products, and they're like half the price. They're much cheaper, but they're typically rubbish. They're very bad quality compared to cake. And then we asked people, and 76% of people would never ever consider supermarkets when buying a cake, which was also something interesting. So cakes are not really there's sort of a thing. The cakes from the supermarkets are sort of a thing that you go for when you kind of have no time, you want something quick, and dirty, whatever, right? Not for like very special occasion, unless you're super budget. If you're super budget, then yeah. And most of the reasons, and we asked the people, why don't you consider, supermarkets? And most of them said, A, they aren't fresh, B, poor quality, C, the icing is too sweet, and no customization, right? Because when you go to supermarket, it'll be in the box already. It'll have this sweet icing on top, and you can't really customize it as well. It's not fresh. That's the biggest issue. And for the egg-free customers, so our core Indians, whatever, for them, they just don't trust it with the egg-free. Because there is a reason why when you have a halal store or a kosher store, everything there is halal or kosher. It's this sort of like cleanliness, trust. Same with Cakebox. Everything there is like free. So I don't consider supermarkets competitors. And I think it's echoed even further by Asda kind of teaming up with Cakebox, and they started building kiosks at Asda. So you have kind of a project they're doing together. Yeah.
Oh, that's pretty interesting. They recently acquired Ambala. I think it's a South Asian sweets brand.
Yep.
Well, we know lots of acquisitions fail if you're not a serial acquirer. What do you make of this decision? Do you think it adds anything to Cakebox that it didn't already have, or what are your thoughts here?
It's purely opportunistic. It's a business that has a massive customer overlap with Cakebox, because now Cakebox sells egg-free cakes eaten by Hindus, very often Muslims, Jains, Sikhs, whatever, right? And all of those people are very often from those cultures who eat those sweets from Ambala. So that'll be an interesting scale-back project for the future, to be to ask the people there and there, do you shop at the other one? And they would see the overlap that there is, but in my opinion, there's a massive overlap. So if you buy egg-free cakes, if you're Hindu, you'll probably know Ambala, but there is Ambala in your area. So great synergy, same customers. Now what they will be doing, they'll be putting them together. So new Ambala will often be together with a new Cakebox. Some of the Ambalas we visited, they had Cakebox stand, kind of like a kiosk next to it that they put inside. There is a massive synergy. Basically, if you think about Ambala, if you can't really imagine it, so there's people listening it's just Indian sea candies, like literally. Cakebox is different because it's cakes, but Ambala is literally just sweets from South Asia. The business was founded in 1960s by a Pakistani guy in UK, but Swedes are from all over South Asia, not just Pakistani. And the business was doing very well. It's from the 60s. They didn't expand a lot because it's a niche, right? You know, Warren always says that Cease doesn't travel. You know, I don't think Ambala travels as well. I think Cakebox travels very well. Ambala, I'm not sure, right? Because cakes are universally cultural everywhere around the world. Asian sweets, not really. But it was interesting. The business was very good, especially in the Asian areas. That's where they are mostly, London. And when Souk opened his first store in 2008, then there was Ambala that opened not far. They're literally just like 2 minutes from each other. And Souk lost like 60% of sales in a month, apparently, because of Ambala. Because Ambala is just such an essential brand to a lot of agents in London. So very, very good brands with people who shop there. We even witnessed some people coming in, and I don't know if there's a pattern. I would need to ask people at Cakebox, but I think Ambalas have a designated English speaker and designated local Asian language speaker at every store, depending on the area.
Oh, really?
So, you know, in Green Street, I think in Whitechapel, there'll be like Bengali, there'll be Urdu somewhere else, Hindi somewhere else, I don't know. And I witnessed people coming into Ambala and greeting them and speaking their native language, not English, with the staff. Like this is very entrenched. This is very strong moat, cultural, religious. You know, if you want to have a customer, if you could have a share in any religion, you would. You know, like this is very sticky, whether it's Christianity, Islam, or whatever, right? All of those. You want a customer who's irrational, whether it's good or bad. Probably a bad thing to say, but you know, you want to have a customer who's irrational in a way. Because if you have rational decision making, you don't really have a moat unless it's really just low price, sort of kind of very tangible.
Hurts pricing power as well. Yeah.
Yeah, but most of the like this type of a moat that you have at Cakebox, which is intangible, which is brand, religion, community, you know, that's why I don't think it's very easy to copy. That's why I think the moat is very strong.
Yeah, it's part goodwill as well. Yeah,
goodwill for sure. And with Ambala, you know, so this is a great business. This is this Indian, London-based Seas Candy, very niche but super powerful in its niche. Not with a lot of growth, but kind of high ROIC, low growth business, right? And then the father wants to like pass this business to his sons, who are not very competent in the business, and he wanted to keep it in the family and all of that. And they really mismanaged the business over the last few years. It was terribly mismanaged. The oldest son, who was supposed to be the new CEO, was a graphic designer who I think didn't know anything about the sweets or cooking or running a business. Souk told us that when he entered the manufacturing plant of Ambala, which they bought in this deal as well as a part of it, he instantly spotted like 15, 20 operational mistakes that would take months to fix. So basically, those sons were mismanaging the business, and then the founder died last year, and the business went from doing bad to collapsing and going bankrupt almost. And that's when Souk kind of scoped it when he bought it, which was fairly opportunistic, I think. And so it will take 2 years to turn Ambala around, as in fix all the mistakes. And mistakes were quite insane. I can give you 2 funny examples of the mistakes, like how Ambala was mismanaged. But one was where some of the franchisees, because it was franchise, it was 20 to 20-ish stores, right, of Ambala, most of them franchise, and some of the franchisees started selling chicken kebabs at their Ambala stores. And what happens when you start selling chicken kebabs is that it becomes haram, if I understand correctly, and especially for Hindus, you can't take it to the temple anymore if it was with animal products. And in Hindu culture, in Indian culture, it's very common with those sweets, you bring them to the temple. It's a very typical sort of thing you do. And what you do, when there's a wedding, it's very common to actually the guest gives the other way around, because for us very often it's like we give gifts to someone's getting married or whatever, and there very often what happens is the hosts give those like sweets as a gift, and very often need to bring them to the temple, do that, and you can't if you have chicken kebabs being sold around them, and it's just messy. Like, I don't know, just think about it. Like, imagine Seas Candy selling chicken kebabs randomly, or hamburgers. Imagine there's a hamburger stand at Seas Candy. I don't think it will do very well. Like Jeff Bezos would say that you need to know your customers. Are you like a French restaurant or are you a fast food chain or whatever? And so that was funny. And the other mistake was, and of course that was terrible for the business, right? Because people just stopped shopping there. And another one was where Sook talked to when they were talking about the sourcing, like where they got the supplies from, potatoes in that case, I think. He asked them, where are you sourcing from there? It's like double the price from the cheapest source of potatoes. And they told him, the founder, Mr. Khan, said you have to buy from there. So just keep buying it from there because it's like friend or whatever. And Sook was not, just go buy the cheaper, and they saved like half the costs on that, apparently alone. So from what I understand, it will take up to 2 years to like fix all those things. And I think it's a great thing. It was purely opportunistic. It wasn't planned, I think. It just came.
You know how they're going to run it? Are they going to integrate it and let one CEO run it, or will it be like independently? Or
it'll be franchised fully with time. After they fix it, and there'll be currently there is a guy from Cakebox who managed like relationships with the franchisees. He managed the distribution centers. He's very experienced, and he's from the Pakistani origin as well. And he speaks Urdu. He speaks the language that they speak in Ambala. And by the way, Ambala, it's called Ambala because Ambala is a name of the small village in Pakistan where the founder is from. And they had this weird habit of hiring people from that village only.
Wow. So you'll run out of employees soon.
So what they started doing is they started putting people also from other ethnic groups, black, white, whatever, also, because that was another thing. This Nepo issue was quite big at Ambala. Yeah, a great synergy, great business, terribly mismanaged, I think.
Okay, interesting. Yeah, I'm very curious to see how that will turn out.
Should be good.
So I think you said Cakebox is quite a holding for you position.
Mm-hmm. Yeah.
I think we can work towards the ends, but I do like inverting certain questions. So thinking about it from like your thesis point, what would be a reason or a clear red flag, for example, to break your
conviction
thesis? What would make you sell your entire position?
Oh, for sure. There could be things like that. I don't think there is fundamentally an issue with the business model. I think business model is quite good. I don't think people will ever stop buying cakes. I don't think Indians will suddenly commit apostasy like at high rates every year. I think this is okay on that front. We're safe. It's purely managerial. There is a mismanagement risk at Cakebox. There is succession risk, which is something we are worried about and I've been worried about for some time. Which is Sook is 60 by now. He's excellent. He's very good. He's very good he has the mastery of the product, mastery of the customer, very founder, very energetic founder. He's in good health. He's very energetic. He's very fanatic in a way. But he's 60 and he will probably he owns 25% of equity as well, himself still. And he will want to sell at some point, at least part of it. He will want to retire in a few years. He said he will always be involved with the business in some shape or form, but there might be need to get a new CEO kind of succession plan. So I think if they don't find as for now, I don't think there is a very clear successor for Sook. Like Mike, the CFO, he's really good, but he's a CFO. He's not really the future CEO type of a guy, despite being great. What I think could work very well and what worked at Domino's system worldwide is taking people from the franchisees. Some of the biggest and most successful franchisees, if they can run 20, 30 stores, why not 200, 300? The current CEO of Domino's UK from Australia, who just took over, he was originally a franchisee running 30 stores in Australia as well. I think that could work. But what will make me sell is not the succession plan being not seen for a long time, that there's someone capable that I trust who could take it over from Sook in a few years. That would be one thing. The other thing would be, I think Cakebox could be, this is more of a bonus, but I think Cakebox could be more financially, more aggressively managed. I don't think the balance sheet is working as much as it could. For example, I think buybacks would be great at Cakebox right now. It's very cheap. It shits cash. Sorry for the word, but it really does. And at like 30-40% ROIC, right? And it's a P of 16. And you build only 25 stores a year, so the growth is fixed. Then why not just repurchase the shares? Like this could, if you have a business with very high ROIC, kind of moderate growth, like fat single-digit growth, which could be Cakebox. Now currently it's higher, but it could be. And then you're kind of this cannibal on top of this. Then you can have multi-baggers like this in the future. So that could be a good thing at Cakebox. That's not happening. Bad capital allocation and very messy financial management could make me sell it. But it's mostly the succession risk. The thing, if there's no good succession, if I don't see someone being there, I might sell it. And another reason why I might sell is simply I don't have an upside anymore. I mean, I'm not a forever never sell sort of an investor. I always compare constantly my positions based on my models to opportunity costs and to other things. So if Cakebox gets overvalued, don't sell it. Of course, if I have other things, I'll buy. So it's really valuation in the future. Capital allocation could be there, but it's mostly succession. That's the biggest thing, and mismanagement risk if they suddenly start making silly decisions. I think because they're not super professional. They're really like founder oriented, but they're not like super professional for now, at least. So yeah, there's that risk.
Yeah, fascinating to think about. I would just love to look into the future and see, let's say 20 years from now, how many stores they have and where they operating. What do you think they can eventually get to in the UK, for example?
Oh, they could easily double the current store count. So like 250, 60, they could have 500, 600.
So that's a growth path for the coming 10 years.
Yeah, a little bit more, 15 maybe.
Yeah.
It's like they don't need to grow fast. And there is also Europe and US and Canada, where I think there's this massive demand for something like Cakebox among the Indian communities, but nobody's satisfying it. And Cakebox has already grown to be this outside of India, this kind of among the diaspora to be this famous thing. And there's a lot of people in a lot of Indians in other countries who are asking for Cakebox because they have families and they have heard about Cakebox in UK and they're really jealous and they won't have Cakebox. So I think there is untapped demand there for sure as well.
You've really triggered me with this conversation. I'm honestly thinking of diving into the business myself for a deep dive. Seems like a company that fits perfectly within my circle of competence, and the UK is pretty close, so I can definitely visit some stores there. And I just love the story, the unit economics. I do think the future looks pretty bright and clear for this company as well.
Do you want to see the model?
Yeah, let's do it. Yeah. Take us through it.
This is my model for Cakebox. It's conventional, breaks down the whole thing. And the revenue is here. This is the next 10 years. And the revenue is modeled, it's very simple. It's based on 25 new store openings a year, which will drive the total stores growth here, which you can see here. And we know from the management, they've done this for the last few years, as you can see here. It's in this range, 26 last year. And we know from them personally that they want to open around 25 stores, at least 25 stores a year for the next few years. So I just run this into just 25 stores a year, which gives you 10% to 5% slowly going down growth if you build this in. And so you basically get sales from old stores and sales from new stores, right? And sales from old stores are run on LFL, on the like-for-like sales, which I assume to be 4%. Management mentioned 5% over the long term. You can play with the number. That's the whole thing about the model, so that you play with it. You see different scenarios. So I have 4% like-for-like here for the old sales from old stores, and you get the sales from the new stores, which are based on the new store additions here. And combined, this goes to system sales. And then the big driver for Cakebox is what chunk of system sales the company will take, right? The split. Like we assume the current one, 50-50. It could change, but yeah. So we end up with a revenue growth of starting at 10 and then going to 8%.
I see. Yeah.
Yeah, that's what we get from this. The EBIT margins are just capped at the current level at 17%. But what's interesting is that I think that it could go back up to the pre-COVID, like previous levels, if you can see here.
Yeah, it's been much higher, yeah.
Yeah. I mean, it could happen. There's a cost of living crisis here. So if you wanted to be super accurate with the model, you could, and see it's already increased a bit over the last 3 years from the bottom of 23.
Yeah, so 70% is pretty conservative.
Yeah, and you could, what you could do is you could keep it, for example, around 17 here, assuming how long the crisis in UK will last, which could be 20 years, if considering it's UK. But and then but the cost of living, people are bound to start buying more, because this is a macro thing in UK. Domino's is going through the same thing. So you could run it up to like 20, 22, right? Towards but it's not going to change that much. You're left with the NOPAT margin of like 13%. Historically was also much higher. And it's better to be too conservative than too aggressive, I think, with the model. So I'm very happy to be on the safe side still with the assumption. CapEx is non-existent almost at Cakebox. It's very low because, it's a franchise. It's very asset light, the business. So yeah, they don't own the stores. They only own the distribution centers and the manufacturing plant. So it only jumps up whenever they build something, as you can see here as well. Depreciation is also low. And you have net working capital, which is 4%. And then you get to free cash flow. And you run the free cash flow and you discount it at the current UK rates of 8.5%. I don't use the beta like other people use the beta on the volatility, because I don't think volatility is the risk. But what I learned from my last job, how that asset management firm, the way they thought about it was to just brainstorm cyclicality of the business, right? If you assume beta of 1 to be market cyclicality, then anything lower will be less cyclical than the market, anything higher. I think Cakebox deserves slightly below 1 for beta, and others are markets. So this is the WACC, which is 8.5%. And it's adjusted for Ambala, by the way, this model. So it doesn't include, we don't know the cash flows for Ambala. So the debt they issued to buy Ambala is also not included, and nor are the sales or anything from Ambala. So the current price is, in my model, is £3, with the current share price being 2. So I get an upside of 50%, the current price.
I see.
And you saw yourself, I mean, the listeners will not see it, but you saw yourself that my assumptions aren't crazy on the margin side.
No, they're pretty conservative, actually. I think the future will probably look a lot better than this. So pretty conservative, actually.
So even with this, you still get 50% upside on the current price, which is, I think, quite good. It's not just a good business, it's a cheap business.
It's a good margin of safety for sure.
Yeah.
I mean, it's like this. What did Munger always say? Hats, I don't lose much.
Oh, that's I think that was Monish. It was Monish quoting Munger.
Oh, was Monish?
Maybe he was. I don't know. I remember.
I mean, he's a copycat, right?
Yeah, he is. maybe it was both of them, to be honest.
It's a good model. I mean, what we can do if you really want to let the listeners see it is we can manage to put a couple screenshots in like a file and share it in the description.
Sure.
And otherwise, I mean, if they really want to see it, they'll just have to check out your Substack, maybe.
Do you know, I can send you the file with the Excel sheet to it, and then you can do whatever you want with this model. You can destroy it, you can share it.
I'm going to sell it, yeah.
You can play with it. It's like a template for you if you want it.
All right, perfect. Well, before we go, Paul, where can people find you? I mean, especially considering Cakebox, plug yourself. Where can people learn more about you and your stuff?
I've never done it before, so I don't know how to do it. But my Substack is Bebop Value. Bebop like Bebop. So like the anime show or like the jazz genre. It's the same. Yeah, and I recently uploaded the deep dive there. Yeah, so that's where it is.
I'll make sure to put it in the description as well for people to see. LinkedIn, or you're not a LinkedIn user?
I have a LinkedIn, yeah. I use it. I think it's good. People always complain about it being like corporate or whatever, but I like it. You can find cool people there, I think. Especially for investing. I think it's very useful to connect with people there. Yeah, I have LinkedIn. Do you want to put it there or?
Yeah, I'll put it in the description for people to if they do want to contact you or ask questions. I think that's probably the best way.
That's the best way,
to reach you. Yeah, we'll make it happen. I think many of our listeners I'm pretty sure, we'll have a much better understanding of the company. I do, at least. So thank you so much for taking the time to do this with us.
No bother. It was fun doing it. I like talking about it.
All right. Well, maybe until next time then.
Yeah, for sure. All right.